Hi everyone, hope you're doing well. Just thought I'd run through a couple of trades that I took last night, and because they're good examples of how to use the high-low churn indicator from Market Masters and also the Market Masters candle volume profile indicator. And it's a excellent example of how the alerts can help you trade. So I was literally sitting on the couch watching the Olympics, drinking a beer, and got a few messages come through on my phone, alerts triggered from Tradingview from the high-low churn indicator, and decided to go and have a closer look at the charts. So I'm going to run through the three that I took and also one that I didn't take, just to give you a bit of balance on when and when not to take the trades. So even though this trade would have worked out quite nicely, I did not take this trade, and I'll just step through exactly why. So as you can see here, we've got the alert at 17 minutes past 7. So that brings us right into here, so this candle here. So we got the RSI broke through the 70% level there. We had a high volume order block, although as you can see it's not very big. We've got our D-shaped profile there, sorry, P-shape there, and so that would have, under normal circumstances, if you had all the conditions right, that would have given me a bit better confidence to actually take that trade. But looking back, we broke through this high level here, but it was just a sweep up. We closed very high. We closed back down here. I thought there was a good chance that it was going to hold at this support level here, so I didn't take that trade. Normally, I would like to see more of a crescendo of increasing volume here into that point. There was, but we're so much below this moving average here. That's quite low volume, so there wasn't really a lot going on. So I decided not to take that trade. Looking at it now, probably could have taken the trade on the retest of that this support resistance flip, but yeah, I wasn't around at midnight to do that. So and that's not what I'm trying to show here. So anyway, so that's one I didn't take, but there's some reasons for that, right? So let's get into the ones that I did take. So here's ID. So basically with this one, we had massive volume spike there. Here's our high volume trigger level. So you can see it's much higher than the IOTA example, like many multiples higher. So there was some there was some serious volume coming in here at this point. You've pretty much got got three drives up as well, and we came into that level, and you can see there is quite a strong level across here, which that high volume punched through. So I guess the theory is that you'd have a lot of breakout traders trading this, and a lot of people taking profits or trying to short at those levels, and probably people who are trying to short early here probably had their stop set there and got wiped out. And so after that, there's nobody else trying to long, nobody else trying to short, and the price just drained out here. So as you can see, we had the spike up there. We moved back up into that point of control there. We've got our P-shaped profile here. It's always a reverse P for me because the way I've got these profiles set up. And then from this point, you can see that yeah, you can take a trade once it gets below that point there. And yeah, normally I would take some profit, at the first point of concern here. So probably about midway through one of these candles here, and then probably leave a little bit on to go down further to any of these points here. So you could have got a 4-hour trade there overall, and whatever that was, probably a two initial take there. So, and yeah, if you go into the alerts here, you can we'll go back to wherever 7 p.m. was, back here, and there should be one for ID in here, somewhere in here. Here we go. So there was the alert there. So I got the alert there. Got an alert for Compound. Got an alert for 0x, G Swift, Rocket Pool, GMX. I reviewed a whole stack of these and decided that that ID Compound was the next one I took. So as you can see, similar sort of effect here, where it's pushing up to a high level, and then we get the maximum volume right at the at kind of that high level there. We're crossing through the Market Masters LTVW developing monthly VWAP, so that was a good confluence there. And if you go back here, you can see also there was this local high here, and there'd be like a high time frame order block in there as well, which we've swept through. And looks like here with these green candles, they're the high volume candles. Looks like there was probably some high volume point of controls in there as well, which we probably touched on as well. So quite a lot of confluence there. Over here you can see I've already got some other drawings there. I must have taken a trade over there as well. But yeah, basically once again we've got our profile in here. A lot of volume traded in this area. Sort of stuffed around a bit, but then and started moving down. So in this sort of case too, it was a Sunday afternoon or Sunday evening, so there's not a lot of professional traders out, so not a lot of people to really push the price. So yeah, that's that. So and the other one that I took was SLP. So you can see the alert here. So I got the alert. So it's 7:22, which is bang on in here. So this one you can see we're pushing up. I've got 3 high volume candles. Is always a good sign when you get this. You get these 3 higher highs in a row, or like a series of them. Means you can you'll be really pushing up. And once again, pushing up into a previous high level. We touched right on the developing monthly value area high as well, and then we just started moving down straight away from there. So here we go. Got a level crossing happening on Bitcoin as well. So it's another example of the indicators. And we've got the profile here. We've got our 3 drives, which is always fun. We've got the trigger for the overbought, and also the high volume. So the highest volume back. Not quite as high volume as some of the other ones. So yeah, we didn't quite hit that moving average, but that's just a good guide. But you can see we've come off sort of the weekend lows here that were pretty crappy actually. And then with this one, I cut this one early because we came down here. I was over on the 5-minute chart. Was watching this kind of flap around a bit here, and decided I'd had enough of the screen, so I decided I'd cut that one just because of all this amount of time that it was actually trading through here. I thought that was going to hold up. So I cut my profits there. If I had have let them go, then yeah, it certainly would have been a better trade. So we've ended up way down here at something like a 9R trade there. So, but word of caution though, if you don't get this kind of like a push up, or sometimes the move can be a little bit too strong, then you can get your stops taken out pretty easily here. So give yourself a bit of extra space. Don't try and take massive R trades. Yeah, look, if you think it's going to come back down to some other level, so this is probably more realistic to sit at the VWAP here, the very area high. Try and take a 3R trade on that. Give yourself a little bit of headroom, and go from there, and just watch it as it's moving here. But yeah, that's about it for that. And yeah, these are all profitable trades. So that was quite a good evening for me. And yeah, I normally only take smaller size trades on these sort of reversals, because they can be, you're basically going against the trend, and the trend is your friend, except in this case. So you're basically looking to go against it there. So always, protect your capital. Make sure you don't put yourself in a risky position. But yeah, I put 3 trades on it at lower than my normal value, normal risk value, and yeah, came out with some easy trades with only 10 minutes of effort. Anyway, hope you all find that interesting, and we'll speak to you next time.